All right, good morning, everyone. Thank you for being here. I just want to thank our two guest speakers today and introduce them really quick. We have Ryan Nell from Petit Cone and Gracias Luis and Dolan, who will talk about the Families First Coronavirus Response Act. And then the second half, we have Rachel Ivanovich from Easy Life Management to talk about some of the changes in the tax laws. So I just want to welcome all of you here, and I am going to actually give the screen over to Ryan. Ryan, thank you for being here today.
Thank you. All right, let me share my screen here. We had a run through on Friday and I did all right. So let's hope I do it. Oh, I already messed up once. Okay, here we go. All right, and there we go. Okay, I think we're good. Somebody do something in the chat if we're not. Thank you, Kathy. My name is Ryan Nell, as she mentioned. I'm an employment attorney. So as you all might imagine, I've been a little busy the last month or so dealing with all of this. And so I've been answering a ton of questions about what companies and specifically, well, I just got a chat. Let me make sure it says I don't have a problem. Okay. I represent employers. So I represent employers. So I'm working with small businesses like yours every day, trying to figure out how to navigate these strange times. And it's been difficult, right? Because the laws are getting written in such a way that, sorry, I'm changing my things here. Technical difficulties. The laws are getting written in such a way that they're coming out quickly. They're changing their interpretations that are coming out for us. And we've had to wade through that in real time with very real implications for employees. And so, well, employers and how that affects your employees. And so the goal here today is to spend the next half hour going through some things that you may already know, but I want to add in a little bit of extra flavor about what we're seeing, the questions that I'm getting asked, and hopefully that can add a little value. And then how this will work, which you may or may not know, is then Rachel will come on and talk about the tax implications. I may use the word tax once or twice. That is the extent of my understanding of how taxes work. So that's her job. And then we'll have some question and answer at the end. So we'll see the chats coming in, unless it pops up and is really pertinent to exactly what we're talking about at the time. I think we're just going to table those to the end. So I apologize in advance. We're not ignoring you. So as we move along here, and by the way, I have my contact information there. So if you have specific questions and we don't get to them in time, or it's a little more nuanced or more personal, or you don't want to share it, by all means, give me a call, shoot me an email. Let's talk about it. It is our job as employment attorneys to be a resource right now. And so we're going to do everything we can, and I'm going to do everything I can. So why are we here? Well, we want to talk about the Families First Coronavirus Response Act. So that's the FFCRA. That's probably an acronym with which you're familiar at this point. You're probably also familiar with the two other acronyms below it, or some version thereof, because they're called a few different things and referred to in their different acronyms. That's the Emergency Paid Sick Leave Act and the Emergency Family Medical Leave Act. And those are the two pieces of legislation that I'm really going to focus on here today, because it's how they impact you as employers in California. And based on the fact that this is with the the Carlsbad Chamber of Commerce, I'm going to assume that those of you listening in today or viewing in today are in San Diego County. So I will have some specific tips as we go through that. Okay, so let's first talk about the Emergency Paid Sick Leave Act. And by the way, I abhor PowerPoint slides. I hate them because I think that when you're presenting in person, you just feel people reading over your shoulder and it's kind of silly. In this particular situation, I have them and they're very wordy. And that's by design, because I want you to have material that you can take away from this. So my understanding is this is being recorded, but also I'm sure you can contact Kathy or she can make these available. Feel free to use them, share them, do whatever you want with them. They're meant to be a resource to you. So what is the Emergency Paid Sick Leave Act? Well, it's temporary, and it's a temporary solution to address all of the COVID-19 pandemic issues we've been having. It applies to employers with fewer than 500 employees within the state. And we will talk in a little bit about some small business exemptions, but it's quite narrow. And that's something that probably is particularly relevant for many of you. It's very narrow. So for us, our purpose is, when we're looking at this, generally we're all in the same boat here together. So the EPSL creates up to 2 weeks of paid sick leave if there's a qualifying reason for that leave based on COVID-19. And the federal government, in speech of federal legislation, the federal government has outlined 6 different qualifying reasons for that paid sick leave. And you've probably seen the list, you've probably gone through it, you've probably scratched your head figuring out what some of them mean and how to apply them. We're going to talk about that. But for the first, what you need to know before we go into those 6 topics is that for the first 3, so those are reasons 1, 2, and 3, and we'll talk about what they are, sick leave is capped at $511 per day, or if you do the math, 511 times 10 is $5,110 per employee. If it's for reasons 4, 5, or 6, which are generally if you're caring for someone else, which we'll talk about, then sick pay is capped at $200 per day, or 2/3 of pay, up to that cap, whichever is lesser. Now, here's one of the times where I'll say tax credit. There is a way to get tax credit. Rachel's going to talk to us about how all that works. I'm just going to talk about the employment law side. So I'm not punting on that. That's her job. It's not mine, her area of expertise. So here are the 6 reasons. The first, and this is the one that we probably get the most questions about because even though it seems straightforward, it's oddly confusing. And it's that the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. And so the million-dollar question we keep getting asked is, well, state of California is under a shelter-in-place order. And so because of that, are we required, is everyone under that? And the answer is no, because, and the federal government has gone through and issued all sorts of explanations about how this works, mostly from the Secretary of Labor. The last was the quote, final rule. It was 124 pages long, explaining how these couple of laws worked. And the explanation that was provided and has been provided by the federal government is that if a company is required to shut down because of that, that doesn't mean that everyone is under a quarantine or isolation order. In the examples, they use the example of a coffee shop over and over, which obviously, unless you all happen to be coffee shop owners, that doesn't mean you're in that industry, but it's kind of a good analysis of it. You know, there can be different reasons why the coffee shop might close. It might be because it doesn't have any business. Well, if a coffee shop doesn't have any business and it's choosing to have its employees not work, then the fact that the employees are not working is not because of an order. If it's because the coffee shop needs to shut down because it is subject to a shelter-in-place order, it can't stay open, well, then it's the employer, not the employee, that is subject to that order. So really, the focus of this qualifying reason, number 1, is if the employee has been placed on a quarantine or isolation order, particularly. That feels like a bit of a strange nuance, but what we're really looking for is what in the law we call but-for causation. You know, what is the but-for reason? But for this happening, why is the person isolated? And if that person is subject to an isolation order, as in has been ordered individually to be under isolation or quarantine, that's when this triggers. There'll probably be questions about that. We can talk more about it, but I don't want to spend too much time for our purposes today. Number 2, the employee has been advised by a healthcare provider to self-quarantine. So if the doctor says, hey, you need to stay home and I'm telling you to do so. That's where number 2 comes in. And number 3 is the employee is experiencing symptoms and seeking a medical diagnosis. So I don't need to be the one to tell you that our medical service providers are kind of backed up right now, and there are situations where someone may feel symptomatic, but their symptoms are such that their doctor effectively says, not yet. Don't come in yet, monitor your temperature, monitor your symptoms, and we'll get a test to you and we'll figure it out when we can. Under that circumstance, they would fall under category number 3. Then we get into the categories 4, 5, and 6. Those are more so related to caring for someone else. So number 4 is if you're caring for an individual who is subject to one of those orders, so you have to care for them. And then number 5 is one that's particularly important because it's going to go into the Extended Federal Medical Leave Act, which deals with school closures. As we all know, likely know, basically every school, I think every school at this point is closed for a while now. And so there are implications that come with parents that need to care for a child who no longer has schooling or childcare. That's where number 5 comes in. And then number 6 is the catch-all. I don't know what it means. It's something that's been shared. It's included on the list, and all of the explanations that we have, they're not really giving us much guidance. It's kind of this catch, right? The employee is experiencing other substantially similar conditions specified by the Secretary of Health and Human Services in consultation with the Secretary of the Treasury and the Secretary of Labor. Right now, we're not seeing much of Category 6, but it's something to keep in mind as this all develops. If we get additional guidance, that's where that might come into play. So the question is not just if someone can work, it's if they're unable to work or telework. So many companies, my own included, that traditionally have office spaces where we go into work every day, have transitioned where we're now basically all working from home. And for some of us, I work from home all the time. Nature of what I do, phone rings all the time, emails work all the time, and so I do that. But for other folks that are more based in the office, we had to create processes whereby we could have them telework. And that's where it fell into these three categories, because we were able to find work and there was work available for these employees. We permitted it under the circumstances we were able to do it. We have a business to run, and there are no extenuating circumstances that would prevent the employee. So there could be reasons why, depending on what the nature of what you do is, and I can sense already there'll probably be questions you want to know about your specific industry. That may be a phone call, but where it might not be possible. It might not be possible for you to continue your operations for a variety of reasons. Well, in that situation, you're unable to have your employees telework. So you want to be performing that analysis to see if it's something that you're able to do. And if it is, explore it. If it's not, that may be the reality of your industry. So a few more things that we want to keep in mind about EPSL as I take a look at where we are in time. Okay, it's in addition to other benefits that are provided. So it's a tack on. The question that very often comes up is, can we require, not ask, but require our employees to use other accrued benefits such as paid time off, PTO, in lieu of using sick leave time? And the answer is no, you may not. You can work with employees and have conversations, but you cannot require them. You also can't require them to find coverage. You can't say, hey, you want to be sick, you got to find someone to cover for you. It's not how it works. There must be notices posted. There's particular rules on how the notice works. You should have things in your physical workspace that say what meal and rest break requirements are, what minimum wage requirements are. Well, you have this similar thing that's been released by the Secretary of Labor, but in this case, you don't have folks at work every day. So the obligation now is to provide that to them. You can send it to them in email. You can put it in the mail. They can get it that way. Whatever's necessary to get it in front of them so that they understand their rights. And naturally, you can't discharge employees or let them go, have any adverse employment actions because they are taking this leave. Hopefully that goes without saying. So as you're going through all of these analyses, what you're going to want to look at, and you've probably already done this because we're a month in, but you need to look at whether the business should still be operating. You need to figure out if the employee or the business is the one that's subject to these orders that may be issued, where depending on your particular place of business, you want to be looking at the telework obligations, and then you want to see what other obligations there may be for EPSL. For example, if that person is sick or they have to care for someone, that could mean that regardless of, well, not necessarily regardless, but potentially regardless of whatever else is going on, they may be eligible under that requirement. So very briefly, I'm going to talk about documentation because I suspect Rachel may get into this a little bit as to what needs to be submitted, but for an employment law perspective, what we need to do is we need to keep track of what our employees are doing. That means that they need to provide us with that information. Now, notably, and I have this in here, in San Diego County, we've taken away temporarily, based on the pandemic, the requirement of a doctor's note, because some people simply can't get in front of the doctor. So take away that requirement for now, which is something that may be in your typical policies. But generally, the documentation that we're getting from the employee needs to have their name, when the leave is requested, what the reason is, so one of those 6 reasons, and then it needs to either be oral, written. We prefer written because we want them to say why and what it is, and frankly sign their name on it, and any other information that's necessary. That information, depending on what the reason is, could include, for example, what the government entity is that's issuing the order, who the doctor is that is saying you can't come to work, or the child's school that is closed or childcare facility that's closed. An important nuance that we're getting on that is I've gotten a lot of calls, more than I would have expected in the beginning, from employers saying, hey, my employee is saying I need to care for my child. Well, I know that that person has a husband or a wife or someone at home, a grandparent at home, that's really the one that's caring for the kid. And so can I push back on that? Well, the bottom line is we need to, if our employee is willing to write down and say, I am the one who needs to be the sole caregiver, we need to take them at their word. Does that mean that some people might, for lack of a better word, commit fraud and have both, the husband and the wife or whatever the family dynamic is, both say that to their employer? Perhaps, but that also means that they're agreeing to go down to 2/3 pay or $200 a day during that time to arguably take advantage. There's not much you can really do about that. Okay. Briefly about the small business exemption. Small business exemption only applies if we're talking about qualifying reason number 5. So there are various reasons why you could hope for more than that, but really it's only if it's the child care reason. So that's something that you're going to want to keep in mind. You don't have an easy out. And if you do it, this is a wordy slide, but I want you to have this so you can take it away. This is what you need to do. You don't have to submit anything, but you need to document why it would cause significant stress on your business. So let's talk briefly about the Family Medical Leave Expansion Act. And what this does is it's for that reason number 5. And again, very wordy slides here, so you have material, but I'm going to sum it up briefly. It goes to category number 5. It's if you're caring for children. And we hopefully know that FMLA is something that applies for leave, for job protected leave for various reasons. And what this does is it creates a new 12 weeks of job protected leave for someone who needs to care for a child. And we have that language in there as to what it is. Now, the way it technically works is the first 2 weeks are unpaid. The idea being that the employee would be paid under the Paid Sick Leave Act during that time. And then once those 2 weeks are exhausted, then the remaining 10 weeks would kick in. I'm seeing where I am on time. Okay. So again, pardon the wordy slides, but this is so you have them to take home. The same general tenets apply. The employee may elect to use their accrued PTO to substitute or to supplement. However, you cannot, as the employer, require that they do so. If you have, for example, you are whatever your business is where you have part-time employees, you're not required to pay them 80-hour weeks if that's not what they normally work. It would be the average number of employee or hours that the employee works. The idea behind all of this is it's supposed to be based in fairness. In theory, if someone works 3 different part-time jobs, they can't be collecting 80 hours a week or 80 hours, or, pardon me, let's rewind that back. They can't be collecting 40 hours a week from each of their employers that they don't normally work 40 hours a week for. So you want to look at how much that person actually works, and then you pay them at 2/3 of their rate of pay. There's some requirements here for how job restoration works. If you have 25 or more employees, you're bringing them back to the same or nearly equivalent. If you have fewer than 25 employees, there are some potential outs where after they take their leave, the position doesn't exist and you have other stressors on the business that may prevent that person from coming back. If you're in that position, I would urge you to speak with someone like me to talk through it because you want to make sure you're not running afoul of any obligations that you may have as a business from an employment law perspective. This goes into the tax side, which I think Rachel's really going to touch on for us. So she'll get into that and I'll leave it. And if there are any gaps between what we covered as we're kind of both deferring to one another, we can talk about questions later on. Importantly, it's not an additional 12 weeks of leave. So if someone has already used 12 weeks of FMLE, for example, for some other traditional covered reason, they broke their leg, they were sick, they had something, it doesn't provide an additional 12 weeks, it doesn't stack. However, it doesn't run concurrently with CFRA. That's going to come up in most issues and in pregnancy related issues. So if someone is taking CFRA for baby bonding, that sort of thing, it's not going to run concurrently there. Okay. We wanted, so a couple more details. I'm going to, for the sake of time here, because I want to talk about some practical considerations, take this material, know, as we have on this slide, that intermittent leave is something that can be permitted if the employer allows it. The law and the guidance we receive on it encourages employers to work with their employees to basically figure out a solution. It's kind of taking this unstated but implied position that we're all in this together. Let's figure out if we can find a plan that makes sense. Your employees have obligations outside of work, and so we want to allow them to fulfill those obligations while also figuring out how they're able to do their job and earn their pay and keep your business afloat. So figure out what you can do there. All of that brings us into practical considerations, and I've got 8 or so minutes left, which I think is about right for this. There are a lot of things beyond just the law that we're talking about, right? The law is one thing, anybody can read it, but then there's these weird nuanced questions where I get a new one every day that I go, that's an interesting question. Let's figure out what we can do about that and how to make sure we're not running afoul of the law, but also how we can work with our employees to get through all this, right? How many emails have we started with during these uncertain times? Well, it's uncertain. So let's think about what's important here. For one, unfortunately, the reality for a lot of companies is that we're looking at the idea of a layoff or a furlough or a RIF. RIF is a term used for reduction in force. We could talk in detail about the specific nuances between a layoff and a RIF, but I'm going to boil it down for our purposes right now to say that we're thinking about layoffs and RIFs as the employee is no longer employed versus a furlough as they remain employed. However, there are different things that need to be considered. For example, if someone is laid off, they're let go, all of the same normal requirements apply. They need to receive their final compensation, their final paycheck, and the like, whatever you would give to them. For a layoff, or excuse me, for a furlough, it's a little tricky. There isn't much guidance on this. There isn't a case that tells us what to do. There are what are called DLSE opinion letters. The one that's most on topic was written in 1993. And so that's the best guidance that we have. And it suggests that if a furlough is for an extended period outside of the current pay period, then PTO should be paid out and final paycheck should be given. If you want to be the company, if there are cash flow considerations where that can't happen, there are companies that are, for lack of a better word, risking it. The ones that want to be as buttoned up as they can aren't taking that risk because they don't want to be the test case. We are going to see litigation at the end of all of this. We're going to see some creative plaintiffs' attorneys who are going to come up with things that may not have been done by the letter of the law, even if they were done with the best of intentions in mind. So there's a risk aversion and a risk mitigation factor in all of this. Unemployment benefits. I'm sure we've all seen that claims are spiking both in California and throughout the country. That's to be expected. What are we telling our employees? Well, for one, it appears likely, at least as long as there are funds that are still there, that furloughed employees should, or employees who have had a reduction in hours should be eligible for unemployment compensation, unemployment benefit compensation. What we are encouraging our clients to do is to encourage their employees to apply for everything they can without making any promises, right? We don't know, and I don't know, I don't have a crystal ball, nor do any of you, that says exactly what the California Unemployment Board is going to do and what they're going to approve and for how long, and if that well run may run dry. For now, let's encourage our employees and make them aware of the resources at their disposal so that they can consider everything that where all their options are. Also consider, in lieu of a layoff or a furlough, a lot of companies are considering a reduction in compensation or in hours, cutting salaries, cutting hours. A few things that we want to keep in mind, particularly for exempt employees. A colleague of mine gave a webinar on this, and he used a really good phrase that I like, and so I'm going to steal it. And he said, putting it bluntly, the way to conceive of exempt versus non-exempt employees is non-exempt employees, again, putting it bluntly, we're paying them for their time. Exempt employees, we're paying them for their work. And that's not to place a value on either one. What that means is an exempt employee, we're not paying them for 40 hours a week or whatever it is. There's not a set schedule. We're paying for the body of work that is done in a week. And what that means is that if you have an exempt employee and you say, oh, well, hey, exempt employee only work 4 days a week and we're going to cut your salary, well, that employee's not working a set schedule anyway. So that doesn't really work. Now you can reduce their salary, that's fine, but putting them onto a reduced schedule doesn't really fly. It can for non-exempt employees. So you want to consider that. You also want to consider if you're reducing their salary, you want to make sure that they are still satisfying the salary test for an exempt employee and that the work that they're doing still satisfies the duties test to allow for that exemption. If, for example, your CEO is going to start working, take a reduced salary but still satisfies the salary test, but then he or she is basically going to answer mail all day, that doesn't qualify, or mop the floors or whatever it is that doesn't qualify as an exempt task, well, then technically there's a misclassification issue there. So you want to be work through all this, be smart about the decisions that you are making. One consideration that I think a good amount of employers are having this conversation, I'm not sure as many are doing it as perhaps should, is the possibility of having exempt employees that you make non-exempt for this period of time. You say, look, we're going to make you non-exempt for some period of time, call it for the next month, for the next 2 weeks, we're going to reevaluate, and we're going to keep track of your hours. You're going to be eligible for overtime. Bear in mind, you'll need to ensure that they meet their meal and rest break obligations, which might be a little tricky for folks who aren't used to that, but it's an option. And as with everything else, the idea is to work with your employees. It's very similar to engaging in the interactive process. Talk to your employees, see if there's a solution that might work and that might be acceptable, if not ideal, at least acceptable for you and for your employees. A few more things as we're continuing to consider remote and teleworking possibilities. Lots of companies are going to, and it's new for them. And when that happens, there are always going to be growing pains. There's going to be questions of productivity. There's going to be questions of how to explain what people need to do and schedules and getting work done. And are they just watching Netflix all day? And oh my God, Tiger King, and did you see the new episode? It's tough, right? And we're all going through that. Create a plan. Create a plan, sit down with the right folks in your organization. That may just be you, that may be a group of you, and figure out what that looks like. You want to talk about how we're going to provide them with access to supplies, talk about reimbursements. If they're using their cell phone, they need to be reimbursed. If they're using different things that they weren't otherwise, consider creating a policy, because it's arguably you should, right? If they are, California Labor Code Section 2802 requires that we reimburse our employees for all expenses incurred in the operation of their business. Well, if they're now using or they're incurring expenses to work from home for you, you need to create a policy that at least looks at that. And that could look different depending on what your business is and how it works, but be thinking about it. And then communicate the expectations, communicate what you want them to be doing. And while you're doing that, think about your plan to come back. It's for a lot of companies, it may be difficult to just flip that switch right back on. And just like it was hard to get everyone back out, it's going to be tough to get people back in. And the more we're able to think about that and create that plan, we've all got some downtime. It's all crazy, but we've got downtime. Let's think about that, because someday this will all pass and we'll be able to get back to life as we know it, or something like it. Let's think about that. And in the meantime, let's maintain morale. It's tough. Some folks are sitting at home by themselves with their dog, and it's different. You don't have that same social interaction, and that's difficult. That puts stress on them personally, professionally. Try to figure out how to do that. I've heard all kinds of really cool things that companies are doing. They're doing Zoom meetings. They're having virtual happy hours. Be careful. Let's be smart about that. But they're doing things that are smart to try their best to keep people as fulfilled as they can be during these, quote, uncertain times. I believe that's all I've got, and I think we're right on time here at 11. So thank you all very much. I'm going to stop sharing my screen and hopefully not shut down this whole thing. I'll be on mute for a little while here while we listen to Rachel's presentation, and then I'll be back for some questions and all that later. So thank you so much.
All right, Ryan, thank you so very much. And Rachel, I'm going to turn it over to you. Is Rachel Ivanovich with Elm Tax, Easy Life Management.
Thanks, Kathy. Thanks, Ryan. That was really informative. So let's just, I've got to figure out how to share my screen here. So just give me a moment to get myself all sorted out. Just added. All right, so thank you all for joining us today. And thank you so much, Ryan, for all of your information. That was really informative. I really enjoyed your presentation. So my objective today is just to provide the latest updates on the coronavirus tax relief, to answer any questions and to give some hope and direction to business owners and all of your families. So I have 3 topics for today. The first of which is a question that I get in my practice the most. That's on the economic impact payment, or the stimulus payment that were created and authorized under the CARES Act, which was passed on March 27th. I'm going to give some updates on unemployment insurance and the pandemic unemployment assistance that was created under the CARES Act. And then I'm going to give you some other tax updates. So to begin, for those of you who were on my Q&A on Friday, I apologize for any redundancy, but I have added some new information. So the economic impact payments, which were authorized under the CARES Act, they are called EIPs, not stimulus payments. And this is very important to distinguish because there are a lot of scammers out there that are attempting to get your personal information. So please be aware that the IRS, the official term is economic impact payment. The new application was launched on the IRS site called Get My Payment on April 15th, which was last week. At this site, you can check your payment status, meaning has it been mailed, has a direct deposit been made, what bank account was used. You can confirm that if it was a direct deposit or if it is going to be a check in the mail. If you had a balance due on your last filed return, meaning your 2018 or your 2019, and you did not include banking information, you can enter your banking information to receive a direct deposit of your economic impact payment on the Get My Payment application. If you have a new bank account and you had one on last year's tax return, unfortunately, you cannot change it online. And that's a question I've gotten from a lot of people. One thing that you do want to keep in mind is that the IRS will be mailing letters over the next 2 weeks, letting folks know where their payment will be sent, how much the payment is. So do keep your eyes open for that correspondence coming in the mail, snail mail, that is. So some more update and information on economic impact payments are, and I've had a couple of questions on this, has to do with, do I have to have a social security number? And the answer is absolutely yes. And if so, for instance, if you are married and you have a social security number, but maybe your spouse has an ITIN, then unfortunately neither will receive an economic impact payment. Now, don't give up hope at this point, because if, for instance, your spouse does get a social security number within the next year, next spring when you file your 2020 tax return, you will have the option to receive the economic impact payment on that tax return. Some folks, their AGI is over the limits to receive the payment. However, like I said, this is an advanced credit for 2020. It is non-taxable to you next year. So if you don't receive the full amount of the credit in 2020, when you file next spring, you will have the opportunity to receive the remainder of this payment. Same thing if you have a baby or if you get married, things will change for you. Your income drops. This will be recalculated on next year's tax return. What I have had questions from clients asking, will I have to pay back any advance on next year's tax return? The answer to that is you will not. So it's non-taxable and you won't have to pay back any advance if, for instance, your income goes up from 19 to 20. So just keep in mind that these things are in flux. So just so you have some additional information as to who will receive this payment, you have to have filed either your 2018 return or your 2019 return. If you want to get the status of your payment on the Get My Payment application, you'll have to verify your identity first. So be sure you have your tax return in front of you so you can access that information from that return. A lot of people are getting a payment status not available when they enter their information, and that could have several reasons. The most common is that maybe you are within that range of income or maybe you've had a dependency change, or you've got married recently. Therefore, the IRS is still figuring out how much of a payment you will be getting. Like I said, please keep your eyes open for that letter in the mail. You should be receiving that within the next couple of weeks. Questions I'm getting about, I've moved since I filed my tax return last. Can I change it on the Get My Payment application? And the answer to that, unfortunately, is no. They are very sensitive to fraud, and therefore they're not allowing anyone to change their address on the site. So the best thing to do in that situation is to e-file your 2019 tax return as soon as possible using the brand new address information that you have. If you have any relatives or friends who are under the filing requirement and haven't filed a return in many years, SSI recipients, for instance, there is a brand new application that was launched last week for non-filers, and you enter the payment information there, your direct deposit information to receive the economic impact payment. If you have an elderly relative who does not file due to the fact that they only receive Social Security benefits, please do not go to the non-filer site. This will confuse the IRS. They will typically have received their Social Security benefit via direct deposit, and that's where the payment will go. If they do not receive their Social Security deposit via a direct deposit and get a check in the mail, then it will be mailed to whatever address is on record with the IRS. So here's the website for that site that I referenced, the Get My Payment. Make sure you go to it, just have your last filed tax return handy so that you can enter the information to verify your identity. So it's irs.gov/coronavirus/get-my-payment. So the next topic I'm going to touch on has to do with the difference between unemployment insurance versus the brand new program that was created under the CARES Act, the Pandemic Unemployment Assistance. And so the EDD announced that they will begin accepting online applications for this new program as of Tuesday, April 28th. So the reason that they are asking for 8 additional days to before they launch this program is they don't even have the technology for it yet. And instead of having all of your applications sitting in a queue, just waiting, they would like everyone to wait, gather their information, they want to test the program, and then they'll be able to run it. So the difference between traditional unemployment insurance and the new pandemic unemployment assistance is that it includes business owners, including self-employed individuals, people who receive 1099, so independent contractors and gig workers. So in the past, if you had your own business and were considered self-employed, you were not typically eligible for unemployment insurance unless maybe you had a side job, a W-2 job. So what the EDD is saying is if you don't know whether you qualify for traditional UI, or pandemic unemployment assistance, to file under the old program. If you know for sure that you will qualify under the unemployment assistance, the PUA, the brand new program, please wait. Please wait. They've asked everyone to wait until Tuesday, April 28th before submitting any applications. So this is really important for self-employed individuals. I've had so many phone calls from all of my independent contractor clients, those who file Schedule Cs, which is profit or loss for business, along with their Form 1040. They wanted to know if this applies to them. Yes, it does. However, you need to wait till April 28th. So the EDD did launch a brand new call center today. As of April 20th, it's going to be operating 7 days a week from 8 a.m. to 8 p.m. They've shifted around their entire workforce to staff this. So just keep in mind, traditional unemployment insurance started receiving, if you were a W-2 employee and affected by COVID-19, you could have, there have been record number of applications, unemployment applications submitted. So if you were receiving unemployment as of April 11th, the additional $600 benefit, which was authorized under the CARES Act, you will start receiving that. It's a weekly benefit. And what we know about the EDD is that if you have traditional UI benefits, unemployment insurance, from the date you file for unemployment to the time you receive your first payment, it takes up to 3 weeks. So just keep that in mind. There are so many applications. Please be patient. If you are an owner of S Corporation or another corporation where you pay yourself a W-2, you can apply for unemployment under the traditional route with the EDD. And you should be now eligible for that extra $600 benefit. So under the Pandemic Unemployment Assistance Program, they will be creating, this is their plan, they will be creating a one-stop shop for applying for both the UI benefits and the pandemic unemployment assistance. There will be an online certification process. This is all going to be available on the EDD website. I have a link for you later. So just keep in mind that the $600 additional weekly benefit will be available from March 29th through July 25th of 2020. The PUA benefits, which is the pandemic unemployment assistance, which is the benefit that was specially created for independent contractors, that will be available through December 26th of this year. So we need to think about this in two different ways. There's the $600 additional benefit, which is being funded by the federal government, which is available only from March 29th through July 25th in the state of California. And then there's the PUA benefits, which is available from March 29th through December 26th. I misspoke on that. So the PUA benefits are available retroactively to the first week of February. So this is a very complicated program that they're rolling out. Then my next slide will show you the 3 phases that they're rolling out the program. When you are able to finally apply for the pandemic unemployment assistance, the PUA, if you can show that you were unemployed due to COVID-19, your benefit that you will be paid out will be retroactive to the first week of February. The EDD is saying that once they have the PUA benefit system up and running, that from the time that you apply for this, your payment will be issued within 24 to 48 hours. And so this is different than the traditional UI program where you have to wait up to 3 weeks to receive your first payment. So our advice to you is to get ready, get your bookkeeping in order if you're self-employed. Make sure that you have profit and loss statements for 2020. Make sure that your 2019 taxes are in order, because you will have to prove income, because this unemployment assistance and pandemic unemployment assistance will be based on eligibility and on income. So what the EDD is proposing, the initial benefit payments will be rolled out in 3 phases. So the first phase is for that period, the retroactive period of February 2nd through March 28th. You will be initially receiving $167 per week for each week that you were unemployed. And the reason this is significant is because the CARES Act was passed on March 27th. So you'll see there in phase 2 that the additional $600 payment starts as of March 29th through July 25th in the state of California. Then there's the phase 3, which is $167 per week for each week from July 26th through the end of the year being December 26th. And these are for weeks that you're unemployed due to COVID-19. So you can receive payments up to 39 weeks. This was also a change that was authorized under the CARES Act. As I said, you will want to make sure you have your bookkeeping in order. You will want to document your situation, because you will be required to certify every 2 weeks that you are still unemployed and unable to work. Certification will be done on the EDD website. You'll be signing under penalty of perjury that you are still unemployed and unable to work. So here's the website if you'd like to check for updates. It's www.edd.ca.gov/about_pandemic-unemployment-assistance.htm. I will have these also available on my website if you have any questions. So some additional tax codes updates for small businesses. I wanted to give you a quick update on where we stand with PPP loans. Honestly, that's probably where I've had the most questions over the past, I don't know, what has it been, 2 weeks? As you all know, they've run out of money, but there is some additional funding hopefully coming. I then wanted to talk about 2 overlooked CARES Act tax breaks that a lot of people are not talking about, because everybody has been caught up with what's going on with the forgivable loans, the PPP, and the EIDL. And then I have some additional tax relief and information for you. So the update on the Paycheck Protection Program, or PPP, we are still waiting on additional funding potentially. They are talking about another $250 billion being authorized. You may have heard the controversy in the news that the Shake Shack is returning or returned $10 million of their emergency loan. Unfortunately, we're not able to reallocate those funds to some other small businesses unless Congress authorizes this, so hopefully they'll do so. I'm going to touch on the FTC's alert for small business owners. As I said earlier on in this presentation, there is a lot of fraud out there. So my advice to all small business owners is it's time to get organized. Work remotely with your bookkeeper and your tax advisor. Get your documents in order. If you haven't filed your 2019 taxes yet, I know that tax advisors are scrambling this time of year trying to learn all the new tax laws and help clients apply for loans. So be kind to them. Make sure you're updating your bookkeeping for 2020. If you don't have that in order yet, you definitely will want to have that in order. And then just some hope for people that have already applied for EIDL loans or the PPP loans. What I've heard is that applicants who have already submitted their applications, these will be processed first in, first out as soon as there's additional funding available. So prepare now. If you've submitted an application for the PPP emergency forgivable loan, my advice is to try and get clarity on the status of your loan. For instance, I received an email this morning from my financial institution, which is Chase. They said that my loan was being, they were looking at the payroll documentation on it. So what I've heard is if your loan has already been approved and submitted by your financial institution to the FBA and has a distinct loan number, that your loan is probably already part of the $349 billion. Whereas if your application is still in the approval process and hasn't already been submitted to SBA, you're probably not part of the $349 billion, but honestly, we don't know. So my advice is to really get your documents together in case you get that email that you do need to submit additional information. For S corporations, that would be make sure you have all of your payroll documents together for 2019. They're going to be asking you for your Form 940, which is your annual FUTA filing. Form W3, which is the summary of your W2 forms. The 941s, those are your quarterly payroll tax forms. So you want to make sure that you have all 4 of those for 2019. And then it's still unclear whether you have to have your 2019 taxes done yet or not. So work with your tax advisor to finalize your 2019 taxes. This also goes for LLCs that file as S corporations, or if you're an LLC with multiple members, if you pay payroll, you'd want to get those payroll forms together. For my sole proprietors out there, I know there are a lot of you. These are the independent contractors. These are those of you that file a Schedule C as part of your 1040. This also pertains to any LLCs out there who are single member LLCs. You file a Schedule C, which is your profit and loss for business. So make sure that you have your 2019 taxes done. This is word that we got from the SBA. I think it was last Friday that they have issued guidance that you have to have your 2019 done. You will be required to upload a Schedule C from 2019 in order to qualify for the PPP. So please be sure that you get that finalized as soon as possible. So the FTC has issued an alert regarding PPP loans. There are so many scams out there currently. So if you receive an email that looks like it's from the SBA or from your bank, don't click on any links. Be sure that you go directly to the source. So go to sba.gov/coronavirus to find the latest information. Again, don't click links. Phishing schemes are happening all over the place. Also, the IRS and any other governmental agencies, they will not call you and ask you up front for your social security number. They won't call you and ask you for your bank account or credit card numbers. So please, if you receive a phone call or a text asking you for your personal information, do not share your information. And obviously be cautious about any companies that will offer to expedite or facilitate any ability to receive a PPP loan. They're probably scams. So just be really careful right now. Here's the website for the SBA, the source there, just in case you do receive an email from the SBA. I don't know how many on this call have applied for EIDL loans, but that's the site where you would go to apply for that loan. So a couple more tax breaks that haven't been talked about quite a bit in the media because a lot of the attention has been on the EIDL, on the stimulus, the economic impact payments, and the PPP loans. I also wanted to touch on the one of the FFCRA provisions that Ryan explained, which is the qualified paid sick leave. So I'm going to touch on the payroll tax payments being delayed for business owners, employee retention tax credits, and then the sick leave. So for those employers who have not qualified for the forgivable loan under the Paycheck Protection Program, this is a provision of the CARES Act that may apply to you. We all know how horrendous our payroll tax deposits are. So this is some relief that's offered to you under the CARES Act. So you are eligible to defer payment of your 2020 payroll taxes and pay half of it at the end of 2021 and half in 2022. So you'll want to work with your payroll providers. I don't know who you work with, but Paychex, ADP, Payroll Hub, some of the smaller companies here in Carlsbad. Be sure to reach out to them and see how you can actually get some money right now in your bank account, get some relief. Employers, you can defer the 6.2% share of your Social Security taxes that were paid on wages between March 27th through the end of this year. And if you are an independent contractor, there is relief for you as well. Please work with your tax advisor to talk about your 2020 estimated payments, because you will be able to defer 50% of the self-employment tax that you owe to those 2 dates I mentioned previously. So just to touch on that, again, this doesn't apply to you if you receive or have received a PPP loan. One of the other provisions that was passed under the CARES Act that people are really not talking about is the refundable employee retention credit. Again, like I mentioned, employers who do not take advantage of the forgivable loans and who are partly shut down due to government orders, or who have experienced a decline of 50% in gross receipts as compared to last year, will receive a credit of up to 50% of qualified wages for each employee that works for you. Now keep in mind, this can be up to $5,000 per employee. It can be pretty beneficial for companies. For instance, my company, I have 5 employees. I can get a credit of up to $25,000 against my payroll taxes if I do not qualify for the PPP loan. And this does apply to wages paid between March 12th and December 31st. Great news, the IRS has come up with brand new Form 7200. You can get money now. Reach out to your payroll providers. They can help with assisting and how to get money in your pocket. So what you need to know about refundable credits are, so when it says refundable, it means that you get money now. It functions like a payment. So you have to keep your employees on payroll and continue to pay them. The amount is up to $5,000 per paid employee, and it does offset the employer's 6.2% share of the Social Security tax. Good news if you don't have that much in employer taxes, you will use Form 7200 to receive a refundable credit, basically money in your pocket, money to help you run your business. So thank you, Ryan, for all of your valuable information that was passed under the Families First Act. So I'm just going to touch on the paid sick and family leave refundable credit. So this is actually how you get the money in your pocket. The eligible employer that he talked about is entitled to a fully refundable tax credit, which is equal to the required paid sick leave or family leave. Also included in that credit will be the eligible employer's share of Medicare taxes, which is imposed on the wages. And an eligible employer won't be subject to the employer portion of the Social Security tax imposed on those wages. So this is a really great credit that was created under the Families First Act. This is something that you do, again, want to talk to your payroll provider. If your CPA does your payroll taxes for you, be sure you talk to them about this. And it does apply to wages paid between April 1st and through the end of this year. The credit, which is refundable, meaning it's money in your pocket, can be taken on Form 941, which is your quarterly wage report, and or on that new Form 7200 to get an advance payment so that you have money now. Some other tax issues that, that apply. The 2020 tax filing season, as everyone knows, April 15th came and went. It was the weirdest tax day ever. Also, first and second quarter estimated payments are delayed until July 15th of this year. So just keep in mind, there were no payments due April 15th. There was no extension filing due. So everything has been shifted to July 15th. If you typically file things such as a FinCEN report, which means you have foreign bank accounts, that also was shifted until July 15th. There was some relief that was passed for anyone who is undergoing a like-kind exchange or an IRS 1031 exchange. The relief has been granted for both your 45-day identification period and the 180-day exchange period. So that's been pushed out to July 15th as well. And good news for everyone who lives in California, California conforms, which is unusual, but thank goodness has the same deadlines as the IRS. So for anyone who took a required minimum distribution earlier on in the year, the RMDs for 2020 were waived. So if you did take one earlier in the year, you have until July 15th to recontribute your required minimum distribution and have it deemed a rollover and not included in your income for 2020. Some other loans and relief to think about. The SBA is offering express bridge loans. So this enables small businesses who have a current relationship with an SBA express lender to access up to $25,000 fairly quickly. And then if you do have an SBA loan in place as of the end of the year, you should be receiving a letter in the mail letting you know that the SBA will be making those payments for you I believe until the September 30th, but do contact your loan servicing department to confirm this. California has some disaster relief loans and jumpstart loan programs available. I've included the link there. It's www.ibank.ca.gov. That's a great place to go if you're looking for additional loans for your business. So finally, my tip for all of you is to focus on what you can do and focus on what is available. I know that everyone is feeling the impact of COVID-19, and my heart goes out to all of you. Here are the links that I've referenced in my presentation. Please be sure you're going to the source for information. Don't click on links and emails. There's so much fraud out there, and just be really safe with anything that comes in text, call, or email. So just some reflections for you as I close. It is 11:30. Get organized, get your bookkeeping up to date. Be sure you call and talk with your tax advisor and or your bookkeeper and make a plan. Review your goals for 2020 and rewrite them. I know you all have at least 5 referral partners. Call them, check in with them, brainstorm with them, see what they're doing. There's power in groups. And maybe you want to sell some things online that you don't need. So you can set up accounts like eBay, Poshmark, or Mercari. Check out your Chamber's online offerings. Thank you so much for the opportunity to present today, Kathy, and the Chamber of Commerce. I really appreciate the opportunity. Make sure you're rethinking your 2020 marketing plan and make calls to your other business owners and your local nonprofits to strategize. We really need your support. So thank you very much for listening today. Please reach out to me with any questions. I'll stay on to answer any questions that were put in the chat line, or Kathy, please feel free to open up.
All right, thank you so much, Rachel. Thank you, Ryan. I am actually going to unmute everyone right now for questions. And I don't see anything in the chat box at the moment, so I've just unmuted everyone, so please, if you have questions, we'd love to hear from you. So no questions? Nina?
No questions.
Okay. All right, well, thank everyone then for coming. Great presentation from both of you. Their website information will be on our website, so if you want to reach out to them directly, you can. And we really, truly appreciate everything you've done today. Thank you.
You're
Thank
welcome.
you.
Thank you for the opportunity.
Oh, you're welcome.
All right. Thanks, everyone.
Thank you. You guys were great.
Oh, thank you.
Thanks, Kathy.